I'm Matt Bouchard at the Hay Adams Hotel in Washington, D.C. for NAREIT's 2017 Washington Leadership Forum. Joining me today is Owen Thomas, CEO of Boston Properties. Owen, thank you so much for joining us.
Pleasure to be here. Thank you.
Now, looking at the economic and real estate landscapes right now, what are some of the issues that are top of mind for you as they relate to Boston Properties' operations and strategies?
Well, we operate basically in two markets. One, obviously, is the property markets where we have buildings and operations, and then second, the capital markets where we raise capital to fund what we do. So looking at both of those, let's start with the property markets. First is demand. We're primarily an office company, so job creation is good for us. So we're very focused on economic growth, particularly in the 5 cities where we operate. And right now, I would say the U.S. economy continues to experience growth, which is positive. It's pretty tepid. There are lots of plans by the new executive branch and Congress to try to elevate that growth, which we're obviously hopeful they're successful. But even if they're not, we are having an adequate amount of growth and job creation, and that's creating net absorption in the markets where we operate. So that's a plus. And then the other thing that we focus on in terms of the property markets is supply. And though we are in gateway/barrier markets, coastal markets, so Washington, D.C., New York, Boston, San Francisco, and L.A., development is difficult, and it takes a lot of time to get projects off the ground, but there is some development going on. And so development is probably a little bit above long-term averages in the office area, but it is up, over the last few years. So that's something that we're watching carefully. But overall, the property markets where we operate are healthy, and rents are going up modestly. And then the second area that we're very focused on is the capital markets where we operate, and that's primarily driven by interest rates. And the benchmark that we think about is more the 10-year U.S. Treasury as opposed to the short rate. So and understandably, there's a lot of focus on what the Fed's going to do, and the Fed's raised the short rates, twice now, once per year over the last 2 years. And our expectation is maybe they accelerate that a bit going into 2017. But if you believe the first part of what I said, that growth's going to continue to be tepid, we don't see a huge amount of risk to the upside of interest rates, at least in the short to medium term. So we think that we'll continue to have a favorable environment for funding our business.
Now, one of the trends that we're starting to see take shape in the office sector is this concept of co-working. Has that played a factor in any way that you look at your strategy with Boston Properties, and how do you go about addressing that?
Yeah. No, it's a good question, and it is an important trend in the office business. And I would just simply start by saying we are big fans of co-working. We embrace it, and we think it's been a positive for the overall office business. And what I mean by that is, WeWork is obviously the biggest provider in the co-working business. There are other competitors, and we can talk a little bit about that. But what these groups have done is they have, at least so far, they have done a very good job of aggregating demand, which we have a hard time accessing as an office landlord. So they're taking people that are working informally at home, in Starbucks or wherever it may be, and they're providing them a place to go to work. And again, they're aggregating all that demand, and then they're leasing significant spaces from us and other office landlords around the U.S. and increasingly around the world.
And lastly, you touched on this a little in your first answer. Yeah. How do you see market conditions going forward for or against increased development?
Yeah. Well, development, I would say in general right now, the forces are, there are headwinds for new development. Development's an important part of the growth of our company. Our history and roots has been as a developer. We certainly acquire assets and reposition assets, but most of the growth that we've experienced over time has come through development. And even today, we have a $2.3 billion development pipeline, which will add materially to our company's growth over the next 3 years. And we're starting new projects, but they're harder to start today than they were a few years ago. And the reasons for that are severalfold. One, as we're now later in the cycle, the costs of development have gone up. So land prices are much higher in most of the cities that we operate than they were several years ago. Labor costs and development costs have risen to more elevated levels over the, they've been rising above inflation in the markets where we operate. And that's been driven by, there's a lot of development going on. I mentioned some of it is commercial office, but a lot of it's residential and a lot of it's infrastructure. Particularly if you look at New York, construction levels, at least on our numbers, are at all-time highs, and a lot of that is the infrastructure spend that's going on. And that creates more demand for construction materials and construction labor, and so it's made costs higher.
Owen, thank you so much for joining us.
My pleasure. Thank you. Pleasure to be here.
For more REIT news and analysis, be sure to visit REIT.com.